Thanks, Chip. Well, for homeowners, it could be another very good opportunity. Mortgage rates are back down again after climbing this summer. And mortgage broker Paul Constantine is here to tell us how to maximize the opportunity. So mortgage rates right now hovering around 4 7/8% up to 5%. And
yes.
This is not something a lot of people necessarily expected to see them come back down right now, right?
That is correct. Rates got up to about 5.5, 5 5/8 this summer. So they're down to historic lows once again.
Okay, so I may want to think about refinancing my loan and save on my monthly payments. What kind of savings could I be looking at?
Well, the larger the loan amount and the lower that you can make the interest rate, the bigger the savings. But on a typical $150,000 loan amount, if you knock off even 1 percentage point, you can save around $100 a month.
Okay, $100 a month, that is something. And so when rates go back up, see, refinancing just doesn't make a lot of sense for a lot of people, right? Because
right.
You got to get at least a 1-point drop.
At least. It depends on the unique circumstances, but there's other reasons to refinance.
Right. Yeah, you could also be an opportunity, to take some money out of my mortgage, sort of a home equity loan, right?
Yes, take cash out of your mortgage, and by lowering the interest rate, the monthly payment can be as low as $40 to $50 more per month, but you've taken out $25,000 cash.
So a lot of folks will find they pay an extra $40 a month, and they can get $25,000 in cash to do with, what they need to these days.
Depending on their situation.
Okay, now a lot of folks will think about shortening, or they should think about maybe shortening their loan term now from, say, 30 years to 15 years, right?
Yes, that's another way to do it. You can save $87,000 to $100,000 on that same $150,000 loan by going from a 30-year fixed to a 15-year fixed. So if you're going to be in the home for 15 years or the rest of your life, that makes sense to save interest on the backside over the life of the loan.
So not everybody's going to be able to, say, go from a 30-year to a 15-year loan. I mean, how much more per month might I be looking at in terms of the payment?
That's an excellent question. In that example, for that same $150,000 loan, about $240 more per month. So you're right. You pay more per month, but you save on the backside.
Okay, these very attractive rates, who qualifies for them? Not everyone.
Not everyone. The higher the credit score, the better. Interest rates sometimes are better if there's a lot of equity in the home. And there's a lot of competition for the $300,000 to $400,000 loans out there right now.
All right. And now there are some new guidelines in place, I guess, from the federal government designed to protect borrowers. But you're saying a lot of these new guidelines, think about them, take a good look at them, because you're thinking they may have the opposite effect. They're not...
Their intentions are quite good, but they are causing incessant delays. So my advice would be to get people to come in early in advance to get the mortgage documents rolling, because the standard 30-day closing could turn out to be 45 days.
Yes, the cooling off period, one of the regulations that's been imposed, but it's something sometimes it can really slow down the process. Okay.
Yes.
Paul Constantine, thank you so much. We want to mention you will find a link to Paul's website on ours, myfoxdfw.com. Just click on the Good Day tab. It is now a little bit before 8 o'clock on this Tuesday morning.